Good morning, traders. Chris Buss here with a post-Fed day morning look at markets for Thursday, March 18th. Okay, so we had Jerome Powell yesterday signaling very clearly they're going to be a reactionary Fed, not a preemptive Fed. What does that mean? They want to see inflation at 2% plus in the data, in the not a forecast. They want to see it in the data before they react. So signaling very clearly that they're fine with whatever the long end of the curve is doing right now, which is rising. And equity markets initially liked that with a big surge off of the announcement and following the presser. But as we said, sometimes or oftentimes that first move out of the FOMC is fake. We saw gold spike yesterday. It's down this morning. We saw equities spike down this morning. We've got ES and small cap futures down about 0.5%. We've got NASDAQ futures down 1.2%. And we've got yields spiking to 1.74%. TLT is down a full $2. I am very thankful I didn't touch my TLT short position. I kind of hung in there. Irish luck never hurts. Certainly could have gone the other way. So, yeah, so now yields are off to the races. TLT is getting the rug pulled, and NASDAQ is feeling the pressure. Especially watch those bubble stocks today, the ultra high valuation, no earnings power kind of names. Watch the ARK family closely, although I looked pre-market and Tesla is hanging in there pretty well. So those are the things to watch today. Also, I incorrectly stated yesterday that there was a 10-year TIPS inflation protected bond auction at 1 o'clock. I had that wrong. It's today at 1 o'clock. So given everything that's happened, the FOMC statement, plus the fact that yields are rising, plus the fact that, Jay Powell said, I want to see inflation higher, that bond auction will be pretty interesting to watch because if he's told us, I want to see inflation over 2% before I even lift a finger, that may largely influence that TIPS bond auction, and we may see another spike in yields off the back of that. So let's get into the chart. If you were an active trader yesterday, you may have had a field day. Lot of volatility, a lot of movement. If you were more of a swing trader type, and just step aside after with the FOMC volatility, that's fine. But as we'll see in the charts, some very important technical levels were respected, and that's why we draw the charts, so we can get that guidance for trading. So let's look at the SPY. We started off the morning weak ahead of the meeting, then we got the meeting, and then we had a huge lift from say 394 up to 398, right up to resistance where it backed off into the close. SPY 30-minute chart, you can see this weakness here off the open with a gap here that I didn't even mark. But it came down, settled into this 393.50, which we had marked on the chart, and coming out of the meeting, rocketed higher. Now, for active traders, you can't. I mean, it's almost a suicide run to try and take a position before an FOMC meeting. I mean, you'll get, there's the potential of being cut to pieces. So you got to wait. So if you waited and you saw this reclaim of 395 and into the opening gap, that would have been a nice place to get long, and you would not have been stopped out. And then you got a nice push up to 398. So that was a $3 move that you could have legitimately captured on a just a technical basis on the reclaim of 395. Let's look at the Qs. Very much the same thing. Gap down to start the day. Opening gap, came down to this support level that we had marked, and then after PAL, the reclaim, the move into the gap, and right up to 324, and stopped on a dime and backed off into the close. I was mentioning in the trading room, I mean, that's a very legitimate place. To number one, if you were lucky enough or good enough to be long, to close out your long at resistance. Buy at support, buy at reclaim levels, close at resistance. And, if you did that, great. Also, I mean, if you're bold, you can take a short there. That's a very objective level to do that. Let's look at the 30-minute chart. Here was that 316 level that we had marked, and I don't have it in here very well, but the opening gap was there. Reclaim, get long, right up to 324, and there was an hour of weakness there, so it doesn't look like a lot. But if you would have flipped short at resistance, you got to move from 324 back to 321. I mean, that's $3 right there. And even if you didn't close it there and just closed at the end of the day at 322, then I mean, you were $2 to the good. So there was some really nice intraday trading ops if you're into that kind of thing. Let's look at IWM. This was a real nice technical study as well. Weakness to start the day. Came down, and we had all these levels. I mean, if you've been watching and following along, we had all these levels nailed starting yesterday on the break below 232. We said that was a place to get short, that the technical target was 230. We got that. Then under 230, we said that the gap would be in the crosshairs. We got that. Perfect technical tag of the bottom of the gap to fill the gap, and then reversed. And this was well before the Fed. I think that gap fill happened at, say, 10:30 or 11 o'clock, reversed, and got a nice push up towards 230, 229, which, would have been $2 to the good. And at that point, you would have probably had to, or logically closed ahead of the Fed, because you don't want to get your face ripped off if they decide to go the other way. But then on the reclaim of 230, that was a technical buy level, and then you got your push up to 232. And here it is on the 30-minute chart, talking about just what we said. The initial weakness, come down, tag that, fill the gap, and then back up, treading water ahead of the Fed, and then you got the Fed push. Facebook, this has been a really nice trade if you've stuck with it. Any swing traders, great trade. If you bought near the bottom of the cycle down here at support and just hung with it long, I mean, it's been $30. We're 254 to 284 in just a few days, a couple weeks. That's been an awesome move, and kudos to you if you've been, certainly if you took a swing trade down here at 254. I mean, you're golden. And but even those along the way that have been playing level to level, you can see that these levels have been pure gold. I mean, the reactions and the flags at each level have been, right on the money. And, they say it ain't bragging if it's true, but I have a lot of confidence in my levels. And if you can simply, take them as a given and focus on your execution around those levels, I think you're going to do really, really well. And if, especially if technical analysis is really not your thing, or you're a beginner and, just getting your feet wet with technical analysis, use my levels and then, build your skill set around them. I've made mistakes before on levels and stuff like that, but they're fewer and farther between than they used to be. So if you're really good at TA, certainly come up with your own levels and trade off of them. But I can only assume you're here for a reason, and that's to, get these levels so you can build your trading plan around the names that you like, or the names that set up well technically. Now, I've got an uptrend line here. I have not looked at Facebook pre-market, but you really don't want to lose this trend line. I mean, you could come back here to 280 and be fine as long as it holds. But if NASDAQ broadly starts pulling back because of these yields, I wouldn't be surprised if, Facebook came back down in here to 276 or even 272, and give half back. And then on a longer time frame, you could take that half back long for a swing, especially if you haven't been in it. Look for a pullback into support, and then, see if you can get an objective long entry. Apple, to a larger degree, has been weaker. We had that technical breakout and move up to 127, where, again, it stopped on a dime. We had that thing nailed. Pulled back into support, 123, got the bounce out of Powell, but now pre-market back at 123. Really simple, guys. Above 123, you can be long. Below 123, it gets a lot more dicey. Below 120.50, and then you've got, this gap in the crosshairs if things start falling apart. And if that were to happen, a break back below 123 down in here, that would make this breakout look fake. And then, you know what that means. Back into the channel, your technical target would be the bottom of the channel, which is way down here after, a gap fill. Tesla. I looked pre-market, holding up pretty well. Obviously, it's carved out a well-defined trading range between 670 and, let's call it, 705, 710. There's a little band there, a resistance band. So you've got a $35 to $40 range there where, price is oscillating. If you're a swing trader, take it long above 710 and take it short below 670, or you can get short, on a break, at the top of the range, or you can get long at the bottom of the range and play this $35, oscillation. But if you break below, then you've got to, be short, and your first target would be down here at 620. Your second target would be a gap fill down to, let's call it 560. Now, in the blog notes today, I did a little write-up on the German car makers. If you go to Volkswagen.com investor relations, there are several fantastic presentations. They had a battery day on Monday. They had an investor slash presentation yesterday by the CEO, and all these, all the slide decks, everything is online. Incredible vision, incredible presentation of their technology and their goals in EVs. They are rolling out models like there's no tomorrow. A lot of Volkswagen models, Audi models, with, sales goals. And yes, Volkswagen is not going to have the Elon Musk halo or the, any kind of thing like that. But, cult following, that's what I'm trying to say. They're not going to have the cult following of a Tesla or an Elon Musk. But they're a real car company. They're the biggest car company in the world. They are dumping boatloads of money into EVs, and they're rolling out with some phenomenal models. Range, capabilities, styling. If you know anything about German car makers, and the same thing, go to BMW. They are doing the same thing. Mercedes to a lesser extent, but they're coming on board as well. And for, that upper echelon range of vehicles, with Audi, BMW, Mercedes, they're going to be every bit as luxurious as a Tesla Model S. And for Volkswagen, at the lower end of the, real people economy, they're going to have, or do have, very affordable EV offerings that are going to be coming on like gangbusters. And they are going for this in a big way. And yet, when you look at the Tesla analyst community, crickets, nothing. Now, the question is, does it matter to Tesla's share price? I can't answer that question. And if everybody's going to say, well, Tesla's not a car company, it's an autonomous driving company, and it's a technology company with software and Elon Musk vision, who knows? But at a certain point, they probably do have to sell cars. And all I'm saying is the world's top automakers, you can throw Toyota into that mix, and the Japanese makers, everybody is coming on like gangbusters. And so watch the watch Tesla closely, and by extension, watch ARK closely. Not only because of the rates, the yields hitting those high valuation bubble stocks, but ARK is loaded with Tesla, and if for some reason, 670 breaks and they pull the rug, ARK is going to feel it. So ARK can be a proxy for not only Tesla but the bubble stocks. So keep those in the crosshairs if you're interested in trading that. Microsoft, it's been toggling through 235 for weeks. Got the pop out of Powell, but now pre-market right back to 235. It remains your pivot. Not much more to say about that. As long as it holds 235, no problem. Can go up here and eventually fill this gap. But if there's broad weakness and it loses 235, don't forget we've got this sizable gap down here at, let's just call it 232. 231.67 down to 227. That is a gap you want to participate in. If you're any kind of active trader, I respect anybody that says, this is all just chop and noise. But if it loses 231.67, it's going to fill this gap, and that would be a good trade to take. Free 50 Club delivered yesterday. Was below 3,100 ahead of Powell, reclaimed 3,100 and jumped to 3,160 and backed off. Now, of course, pre-market is back to 3,100, but the free 50 Club delivered 3,100. Reclaim was your technical buy, and you got that $50 move. So again, key off at 3,100. Google, very much in an oscillation mode, with 2,100 being the high side, and let's call it 2040 being the low side. And you got this gap here, and you got the low end of the range here at 2,000. Certainly a wide enough range to trade, actively if you so choose. If you're more of a position swing trader, you can get long at the low end of the range and look for a move up to the high end, or wait for the breakout or the breakdown to actively trade it. I didn't look pre-market. I can only assume it's down towards the lower side of the range here, around 2075 to 2050, in that range. Netflix. I could have drawn a nice trend line here off of this 492 low. Coming up here, rejected at 535, back down to 525, a bump off of Powell, and now pre-market, we're right around this area. I think 525 is your pivot. If it can reclaim that this morning, it can see a push back up to 535 on the low side. If it lost 517.50, I can only assume it'll come back down here and test this prior gap range. Now we're at the 25-minute mark. Just a couple other comments. Also, in the blog notes this morning, I had a little thematic idea on e-commerce. Jay Powell has told us, and we've seen it, that inflation is going to be running. What does that mean? Prices for all the inputs are going up. Metals, materials, resources, freight, labor, cotton, everything is going up. FedEx is reporting their earnings today. They may have some comments on the e-commerce segment. 2020 was the golden era of e-commerce. Everybody locked down, nowhere to go, nowhere to buy, but online. We've seen that and heard that. But now as we open up and people want to get out, they want to shop, they want to mingle, are they going to go back to e-commerce in droves? Have their habits actually changed forever? Or are they going to back off of that and, get out in the physical world and do some shopping? So there's the demand side plus the input side. Are all these input costs going to squeeze e-commerce margins, especially the freight and, all the associated costs with labor, blah, 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 blah. It's something to watch. I don't have any position. I know the Chinese retailers, Baba, JD, PDD, Pindao, have been soft lately. Amazon has been treading water. So let's watch that. Too early to tell, but as things roll forward, I think it's something to watch on e-commerce margins. And that goes for all the other, specialty names and stuff like that as well. The Stitch Fixes and, all that other kind of stuff. And one last comment. I think there's going to be a massive raid on resources and materials, from copper to steel to cotton to aluminum to concrete to, you name it. I think there's going to be a massive run on that stuff. I mean, it's already been going on. I think it's going to accelerate. And, I think opportunistically, we can look for dips and weaknesses in those segments because there hasn't been an inflation mindset in this country in like 40 years, okay? And once that switch flips to like, oh my God, we got to buy it now because 3 weeks from now the prices are going to be higher, that's a whole nother ball game. Because in the past, it's why buy now because the prices are probably going to be lower in a month from now. We don't have to worry. We don't have to be in a rush. But now I think there's going to be a resource grab. And I don't know if you saw it, but in the copper market, there is a massive, massive supply deficit. Nobody's put any money into these things in 10 years. So now as demand ramps, there's a massive hole in supply. So there's going to be a lot of pricing power for the producers of these commodities, Vale, BHP, Rio, Southern Copper, Freeport McMoRan, all those resource names, U.S. Steel, Century Aluminum, all that stuff I think is going higher. And, let's not let it, double again on us without participating. So let's look at that. Okay, no matter what I do, it always seems like we wrap up at the 30-minute mark. I hope you found value in the presentation. If you're new here, hit that subscribe button and the alarm bell. Never miss a beat on my video content. Jump over in the show notes and you can register for my content. All my content, you'll get midday updates and trade ideas, all that kind of stuff. Hopefully that'll help you in your trades. Also, you can visit the website where there's a lot of informational articles on trading psychology, trading tips, etc. And you can read the blog post every morning where there's additional content like I mentioned this morning. Be great to have you. And of course, you'd be welcome then to join our trading. We've got a number of female traders in there that are, and have a good day of trading. Let's watch those yields. Let's watch the bubble stocks, and have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.